Hey everyone, it's Andrew here. So I've put $20,000 to test Fundrise over a 2-year period to see if it worked. And secondly, to see if I could find any issues in why this might be a risky investment. So here's the proof. Now I'm completely out of this investment and let me tell you why. Now the reason why I'm here doing any of this is because I found that financial content online is pretty disgusting, and I felt that if I show things like my entire stock portfolio or actual Fundrise account, that this transparency makes me vulnerable to criticism but really responsible for what I say. I'm not into crypto or NFTs or penny mining stocks, so here on my channel is my no approach to long-term investing and wealth. Okay, so here is the deal with Fundrise. Now I admit that it's a really good idea. Essentially, it's a managed REIT, a real estate investment trust. Fundrise buys properties throughout the USA, does the work in construction and improving the value of the assets, and as the investor, you get about a 7% return after the fees on the investment. And the reason you get this 7% is because sometimes that they will sell these properties and make quite a big profit on when they bought it, did the renovation or whatever it was, and then sold it, or the construction or the new zoning or whatever they did to make a profit on that investment. Or they have a lot of properties where they've just got stable rental income from both commercial and residential real estate. So all of that combined generates about 7-8%. After fees, it's about 7%. Now it is very easy to invest. You just make an account with Fundrise, deposit the money, and nominate the style of investment strategy you want. So here are some of the strategies that Fundrise talk about that you can invest in. You have fixed income, core plus, value add, opportunistic. And they give you some rough ballpark figures of what's possible as the fixed amount of the income. So like the rental income, essentially, that would be fixed income. They even explain what fixed income is here. And here are some of the investments they have. So this is properties they've developed, and they're just collecting the rent from them, essentially. So that would be the fixed income approach. Then there's the other ones, core plus and value add and opportunistic, are all mixed strategies of some degree. So some of them are redevelopment projects, some of them have redevelopment projects and then rental returns as well. Some of them they will just sell though to pocket the capital. Value adds the same. It's quite a balanced approach. And then opportunistic, there's just saying that they're only really looking for redevelopment projects and commercial property and things that they're looking to flip. Okay, so that's they're the different approaches with their strategy. They talk about here on their website why they think. Now, look, I've had a few issues with this little part here, but anyway, this is why they think their portfolio of real estate investing is superior to stocks and bonds. They have you can go through this in your own time, but they have a little calculator here. I don't think they've really done a great job of comparing this very well here, but that's okay. They're calling it risk-adjusted returns, and look, I don't know. Risk-adjusted returns is a bit of a gray area in my eyes. So you have a funny little calculator here where you can say, oh, I've invested all my money in stocks, 5% in bonds, 5% in real estate, and it can tell you what your return would have been over the past 20 years if my computer ever decides to load. And it says what your portfolio would have been up, 5.5%. If you had all private real estate over that time, or mostly private real estate over that time, the difference is that apparently it's 8.3%. Where they're pulling this private real estate number, and I don't know. I think if you have a diversified approach like Fundrise, maybe that was possible over that period of time, over the last 20 years. But look, stocks in my eyes are a better investment because the businesses have far more upside than any property. So you're not going to get 100 bagger out of a piece of real estate, where in the stock market, if you've done your work, you can really get superior returns to any other method. And it's been proven by the Warren Buffetts and some of the great fund managers of the world. So I don't think, this is good because it's actually telling the regular investor that, it's pretty hard to win in most of these games anyway. And even an 8% return is, not outstanding. And the next page here is talking about why private real estate over things like a publicly traded REIT. I think this is really interesting to say that they have a better passive income, or like the returns in private real estate has been superior to a REIT. I would consider them kind of like a REIT anyway. They're just not publicly traded, and they're just trying to sell themselves here on this side, and that's okay. That makes total sense. Here's a little bit of a snapshot of the real estate's their portfolio, their projects under management right now. So you can see the assets they have, which is quite a large amount at the moment, and how many active projects and completed projects they have. This is showing some sort of track record of how it all breaks down as well. I think that's quite interesting to see. And they go through here, explore all our projects in our portfolio. You actually go into like seeing what they're actually doing. So this is like a single family rental. It's just a house in Palm Bay, Florida. And then you've got like looks like a commercial property here in Arizona. So there's lots of different things. You can really dive into the details here and get a feel for all the different projects and things they're into, which is, I think, really cool that you get this transparency. Now, the last thing I want to show you is probably the most important part, which is going to be the fees. So here are the fees and waivers here. So we got a starter, basic, core, advanced, premium. Don't worry about any of that too much, because essentially the fees are about the same. The annual advisory fee, so this is non-negotiable, you've got to pay this, is 0.15%. So you'd be like, 0.15%, an S&P 500 index fund is 0.04%. So this is not it's not huge amounts different to an index fund, but this annual asset management fee it says up to 8.85%. So all up, we're looking at about 1%. So 1% is going to be the fee. Now, 1% for a management company to do all the work that they do, and considering you're going to get, well, like I said, it's about a 7% after fees. It's probably okay, considering, like, imagine trying to do any of these real estate deals yourself and the time that would take, and the effort that goes into this. So if you really want to invest in real estate, I actually think these fees are pretty good. Okay, so this is so much better than investing in property yourself. You have to get a big mortgage tying you to a job for a long time, or you have to deal with tenants, which is sometimes okay, but generally it's a nightmare. Even getting a property manager, they are going to always be wanting something fixed or improved or dealt with. Yeah, there are some tax benefits, but it's also a lot of hassle. Fundrise allows you to invest in real estate without the hassle, and it's as passive as you can get. I think the fees are fair considering the work that they have to do. Now, before you run out and invest in this, let me explain what I found out over the 2 years of being invested in Fundrise. Well, first of all, it returned around 7% per annum after fees. So that's not a bad return at all, better than the bank anyway, and pretty much the same as a rental property without any of the hassle. Now, I actually really loved the visibility on the platform. It would update every day to show you this increase in the value of your investment. Dividends were paid out on time, and everything that they said they would do, it happened. I liked keeping a track of some of the investments they were making. I thought Fundrise were doing good real estate investing, buying property in strategic locations, and were consistently getting good returns on these properties. Sure, occasionally a property wouldn't return as expected, but that was very transparent. Considering it was a portfolio approach, it all kind of evened out. And I think this is far better than me trying to invest in real estate, investing in one house, in one neighborhood, in one city, in one country. Well, that puts me at a lot of risk. Something could easily go wrong with that one property, whereas a diversified portfolio approach totally makes sense for real estate. But I felt very uncomfortable about a few things, so much so that I pulled my entire investment out. The first thing was that I had to take their word for it, and this made me feel uncomfortable. Yes, they were audited. Yes, they are registered. But because it isn't a public company, I couldn't get the information about the finances about the company that I wanted. I couldn't look over the balance sheet. I couldn't see the debt levels or the repayment of the debt schedule. I couldn't see if this was a slick Ponzi scheme. I had to take their word for it. And I don't like taking their word for it. I feel far more comfortable with companies that disclose their financials. The second reason was if there is a run on Fundrise, like everyone trying to run for the exits and get their money out, Fundrise have the ability to say no. This is good and bad. Now I can prove that. It's actually on their website. So here on the Fundrise website, it says, how does liquidity work? While Fundrise should be viewed as a long-term investment, we understand that investors may want or need to prematurely liquidate or redeem their shares. Accordingly, our investors may request to redeem shares at any time, although such redemption cannot be guaranteed, especially in times of economic uncertainty, and there may be costs associated with premature redemption. So there's no guarantee you can get your money out when you want it. So in crypto, a run on the exchange can destroy the exchange. Same with banks. If a run on the banks happens, banks can collapse if they don't minimize the damage. So if some news comes out that there were some illegal things going on at Fundrise or some issue with the law, I could easily see a run on Fundrise happening. If this happened, Fundrise could say no to all the withdrawals, which will definitely cause a lot of anger amongst their clients, but maybe actually be the right thing for the majority of investors. By having this power, they could be able to protect their business. So if I was the founder or CEO of Fundrise, I think this is actually a great idea. But as an investor, I don't want to be caught up in that mess either. Okay, to summarize, it's a good concept. A great, easy to use website, gives access to real estate deals that are not possible individually. It's so much better than dealing with tenants damaging your property and all the repayments of mortgages. You get all the benefits of real estate investing without the hassle. A solid 7% return, but you have to take their word for it because they are a private company. It needs more investigation and you need to get comfortable that this is not going to implode. You might be told you can get your money out, and this could get ugly if a run on Fundrise happens. So even though I was doing this as a test, I didn't like having that much money in a place that I couldn't see the financials, and that honestly, I didn't know the management of the business. I probably use this money to invest in Alibaba now, and that's probably been cut in half, so yeah. Now, when I did go to withdraw the money, I had no issues, but the market was hot and real estate prices were flying high. I can't imagine anyone wanting to pull money out at the time that I was pulling money out. But I'm happy I am out. I wouldn't invest again, even though I like the idea and I like lots of things about the business. I'll stick to investing through Interactive Brokers because they're a public company and I can see the financials. That gives me a lot of comfort. There's a link in the description for those interested in a safe broker. Also, there's a link to my e-magazine where I give my market commentary each month, plus my watch list and updated intrinsic values. Give the video a thumbs up if you liked hearing about Fundrise, as it helps my channel. Thanks for getting this far in the video, and I will see you next time.